The decentralized finance space is constantly changing. It changes much faster than one could think. Look, the last 18 months have been wild. It's gone out of crypto winter, and now there's tons of activity happening. Today, I'm joined on Crypto Clarified by Camila Russo, founder of The Defiant. Cami's back. It's going to be excellent. You know me. My name's Benjamin Dean. I'm Director of Digital Asset Strategy at Wisdom Tree. Welcome back to the podcast. You know what we do here. We examine this complex and fast-moving crypto space so you can navigate its opportunities and risks. Before we start, US listeners, check out wisdomtreeprime.com on the Apple or Android app stores. Subscribe, share, doesn't matter which app, Spotify, YouTube, iTunes. Subscribe and share. Check me out on X at Benjamin Dean, the Bird app. Shout out time. James, Sam, and compliance. This is for you. Before I begin, I do need to state the following. To clarify, the views and opinions expressed in this podcast are those of Wisdom Tree and the Defiant and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast research, nor as investment or tax advice. The information and opinions expressed in this podcast, not a recommendation, offer, or solicitation to buy or sell any securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results. All right, let's cut to Cami. You'll love it. Cami, hey, welcome back. Thank you for joining us.
Thank you so much. It's great to be back.
It was really nice to see you the other week at Consensus in Austin, and it's always nice to have you here. I miss you. You and the Defiant do such great work tracking the space in DeFi and broader crypto land in general. So it's really a pleasure to have you back today. And I'm looking forward to discussing a few topics with you for the listeners' benefit, because you are so close. You've always got your hand on the pulse of what is going on in the crypto space. First thing is, it's been maybe a year or so since you and I have been on an episode together. Let the listeners know what you've been up to. Like, I know life is good and we survived the crypto winter. So just give folks a quick update and how are things?
Yeah. Okay. So at the Defiant, we continue tracking DeFi very closely. I'd like to think closer than anyone else. And there's just so much that's been happening in this space. I think the landscape has has shifted quite a bit since we last spoke. So yeah, happy to dive into kind of what the main trends have been in the past few months.
Cool. All right. So yes, absolutely. The landscape has shifted a lot. Let's think, like, if there's 3 ideas at a high level about things that you have seen change in the last 12 or so months, what would they be? And then we'll go into each one in depth.
So I think there's maybe 3 to 4 that I'd like to highlight. The first one, probably the main one, has been restaking, emerging as now the biggest sector in DeFi. So this is definitely a huge shift. Restaking didn't really exist a year ago, and now it's EigenLayer and all of their related restaking protocols and liquid staking and liquid restaking protocols. They have billions of value locked. So that was a really really fast growth in that sector. Then the second trend that I think is just fascinating is how DeFi and crypto protocols and dApps are incentivizing users. And this has always been the case in crypto. Like it's always a game of incentives. But in the past year, this new mechanism has emerged, which is points system. And so protocols are giving out points instead of directly, or I should say before airdropping tokens.
Okay.
So before, if users kind of assumed that if they used a protocol or dApp, they would get an airdrop down the line. Now these projects are making that a lot more explicit. So they never actually say points will correspond to tokens, but everyone assumes they do.
Yeah.
And so there's been kind of an industrialization of points where people are doing it like people are farming points almost like professionally, if you can call it that. Um,
Really,
like
really.
with bots and like I don't know, like it's become kind of very widespread in DeFi. So we can talk about that, and what the effect of that has been in the airdrop itself. Um, and and then there's uh, two separate trends in kind of the L1, L2 space, which in the layer one space, um, Solana has had just an impressive growth.
Hmm.
You know, it's a huge comeback story. Everyone had left Solana for dead after FTX, but now it's really consolidated itself as the third largest blockchain after Bitcoin and Ethereum. And then in the layer two space, tons of activity. On one hand, there are now Bitcoin layer twos, and that comes together with just rising activity on Bitcoin itself. And then
Hmm.
on the Ethereum layer two, super interesting is that um, they have become so successful that they now may be negatively impacting the Ethereum main chain
Okay.
itself, because everyone's just transacting on layer twos and not on Ethereum. So to me, those are the main narratives and trends in the past year.
Okay. That's a great panorama of the changes, very succinct as always. Um, Now, let's go into each one individually. So, David Duong, who's the head of institutional research at Coinbase, was on a couple of months ago on this podcast. And he talked about restaking, eigenlayer, as you said. And I asked him, like, restaking, really? Like, explain it, because even I hadn't had my eye on it. If you were to give a quick explanation to the listeners, like what restaking is, why it's useful, why it's happening, that would be very, very informative.
Sure. Okay. So, um, as probably most listeners know, Ethereum is now a proof of stake chain, unlike Bitcoin, which is proof of work, right? So,
Yes.
in order to secure the chain, um, Ethereum needs validators to deposit Ethereum, like the ETH, the token, on the chain. So instead of providing um, computation power, like with Bitcoin, Ethereum requires staked ETH,
Yes.
um, and so that's kind of the basis of this. And at first, there was the first layer of this is liquid staking. So what that does is people are able to stake their ETH. And the reason why they do this is because they get incentives. They get rewarded for
Yes.
depositing their ETH, right?
Yep.
So, but the downside is that they have their liquidity locked away. Like, you lock your ETH, and in order to do that, you can't use it anymore in other places in DeFi. So what
Yes.
liquid staking did, and the main liquid staking protocol is Lido,
Yep.
they issued a sort of like receipt for that stake, or like a derivative that represents validators staked ETH. So say I deposit the 32 ETH required to stake, and by the way, you can stake at lower amounts, but that's maybe getting too in the weeds. But whatever,
Yeah.
I stake 32 ETH, and then I get SE, which is Lido's like liquid staking token back. And with that SE, I'm able to use it in other places in DeFi. Maybe I can deposit that in Aave and take a loan out of that liquid staking with that liquid staking token. So I can put more of that capital to work. So that's liquid staking. And so there's this idea that you can do more with your stake ETH, right? And so Eigenlayer, what they're doing is they're saying now you can take your stake ETH on Ethereum and use that to also secure other protocols, other dApps built on Ethereum, so that those dApps can kind of subcontract Ethereum security instead of having to build their own network, like their own, instead of having to just like start their own security and validator network from scratch, they use Ethereum's. That's the premise. So Eigenlayer takes stake ETH, which can be in the form of liquid staking tokens, like you can deposit SETH tokens on Eigenlayer, and Eigenlayer then uses that stake ETH to secure other dApps that are being built on Eigenlayer. And these dApps are called actively validated services, AVS. And there's this whole there's there's like dozens of AVSs lining up to to build on Eigenlayer and to use this security. But right now there's just a handful that are actually live. But that's just kind of parenthesis in this explanation. But the idea is that in the future, you'll have a whole ecosystem of applications that are being secured with staking. And so this is attractive for Ethereum holders because now they get the yield from staking their ETH on Ethereum, but they also get the yield from restaking that ETH on Eigenlayer. So it's just a way of earning higher yield on your ETH, and that's been super attractive because of just that yield, but also because of the other trend that I mentioned, points. So Eigenlayer has a huge point system, and all of the different kind of restaking protocols do as well. And so, okay, so Eigenlayer is a restaking protocol, and there are also liquid restaking protocols. So like the same thing that Lido was doing for Ethereum, like providing this receipt for the stake ETH, there are now protocols like Russo and other ones that are providing also a receipt for ETH staked on Eigenlayer. So yeah, it's like layers and layers of like staked ETH and tokens and yield and yeah.
Okay. So let's see if I've got this correct then, and you correct me because Cami,
Okay.
you're the expert on this. So essentially, it unlocks liquidity. There's another piece which is it's almost like using it as collateral. So the ether is used as collateral, it's locked up, it's staked, and then there's a way to unlock the liquidity. And there's another piece which is then if you unlock the liquidity, what will you do with it? And in essence, you get to bootstrap other applications, maybe networks. You could correct me. And in that way, you leverage the base Ethereum chain and the strength of it, the security, reliability, and so on. But then it's almost like because you're saying like I have collateral in this system and I've got this liquidity mechanism, I'm able to then say to other networks or other applications like, no, it's like here's my vote and it's strong and it's correct, and then it kind of rolls from there. Correct me if I'm
Mhm.
wrong, and I might have summarized it
Yeah.
incorrectly.
No, that's right.
Okay, cool. It's one of these ones where chatting with you, chatting with David, like I can see, as you said towards the end there, like, it's layers upon layers. It starts to get complicated. Well, life's complex, right? Like evolution. But that is very, very new. We'll see how the incentive mechanism plays out and if there's any piece in that stack that can break. But that's fine. It's making
I mean,
ether. Go ahead. Sorry.
yeah. No, to me, like, and I've said this bunch of times on our YouTube channel. Um, to me, the risk here is that right now, let me check. Eigenlayer has $14 billion of TVL, of
So
value locked.
not zero. Long way from
Yeah.
zero.
Okay. It's the second biggest DeFi protocol after Lido,
Okay.
after the liquid staking protocol. Um, and all of that is, are people making a bet that these AVSs, like these like dApps being built on Eigenlayer, will produce enough value to, you know, to pay for those for that stake, like, and
Yep.
to me that's a big question.
Yep.
All of this is assuming, like, all these projects that are being built that have, they have no traction yet. They're just like an idea. So far, there's, like I said, a handful who are even live, let alone have any product market fit, any real users.
Mm-hmm.
So that's just like a huge risky bet, that these $14 billion will be enough to, I mean, no, that these AVSs will produce enough economic value to require that much security.
Yep.
So yeah, that's kind of the issue right now.
Yeah. Yeah, we discussed precisely that, the economics going forward. Will people pay to use the service? And if they do, how much and for how long?
Mm.
So absolutely. It's very like kind of on the edge of change in the space or innovation, you could say. We'll find out, won't we? But at least
Yeah,
someone is out there doing something. It's better than crossing your arms and saying, I don't like it.
definitely. I mean, this is real innovation. Like I said, this whole sector did not exist a year ago, so it's
Yeah.
just fascinating to see.
Yeah, see how it plays out, right? Let's move to the next one, which is around airdrops. I think that we've talked about airdrops in previous episodes, but just for the listeners' sake, for those who don't follow the space closely, you and I have both seen this airdrop thing happening. Um, what is it? Why does it happen? And what is it, as you said earlier, incentives? What is it meant to do?
Um, so airdrops are a way for projects to distribute tokens to their users, to reward participation in protocols and applications, and maybe for like regulatory reasons, or who knows, why it started out this way, but they distribute these tokens for free. Like, people are able to claim tokens for free.
Yep.
I think the first project to do this was Uniswap. They did an airdrop back in, I think it was like 2021.
Yeah, it's
And
here too long, Cami. Like, how long ago was
yeah,
it? How many
yeah,
years?
seems like yesterday, but I think it was like 21.
Okay,
That Uniswap did their airdrop, and it was a great airdrop. Like, they
I remember.
just gifted. It was a fixed number of uni, which right now I don't remember, but they gifted the same amount of uni to anyone who had once interacted with the Uniswap DEX.
Yeah.
And so, at the time I covered it, obviously, at the Defiant, and for some people, like, it was life changing. like people in emerging markets, like they suddenly got like $10,000. Um, and
Yeah,
because
right.
if you use like different wallets to interact with Uniswap, you would get, uni for each wallet that interacted with the debts. So, some people did see a, pretty nice, decent amount of cash from that airdrop.
Hmm.
So anyways, that really just uh, made the community kind of rally together and just like support Uniswap even more and so on. And it was really unexpected. And then from there, from then on, everyone in DeFi started doing airdrops, and the systems and distribution mechanisms became more and more complex and sophisticated, to the point where um, they are being like rewards are being quantified a lot better now, or a lot more explicitly now, I should say. So like I said before, users of DeFi protocols had come to expect that they would be rewarded with an airdrop for using a protocol. So you could kind of speculate as to which dApps would down the line issue a token, and then people would start, using the dApp in different ways, like providing liquidity or trading or whatever. It kind of like expecting that somehow for any of those actions they get tokens in return. Um, but now in the past year, it's become more and more popular for dApps to give out points for activity. So, like if you deposit liquidity, you get X amount of points. If you trade, you get X. If you had been using the protocol for X amount of months, maybe your points will double. So there's like it's really really gamified,
Yeah,
and
that's
of
the word.
course, like
Exactly.
even like it is a total game, and even if nobody explicitly says these points will correspond to tokens, everyone assumes that's the case, and it's how it's been played out. Like in many cases, points have corresponded to airdrops, tokens down the line. So yeah, it's become like this whole like industry of point farming, and there's bots to do this, and people are, it's like what they do as their job is to farm points, um, and it's gotten to a point where airdrops are just not enjoyable. Like they're not what they used to be. Like right now, um, when there's an airdrop, you can be 100% sure that there will be a backlash, because all these people farming points become like get this entitlement of I've been working for this, I deserve a cut. And because this this thing is being like abused to death, and there's like so many people farming points, that airdrops become super diluted. And before, like when it wasn't like such an like industrialized process, and like I got an airdrop for like having an ENS, or like I got an airdrop for
Yeah, I know.
donating to Gitcoin, like for just like genuinely interacting with crypto. It would always be like, okay, like a great thing, like okay, I got money for free, like how, like I'm not gonna complain about that. um but now people are complaining because it's like, oh, I did all this work, I had all these points, but then this other group got more, like got a bigger allocation, and people start fighting, and it's just a big mess.
So, it, you mentioned at the start incentives, right? So here's a big economic experiment playing out. You mentioned that there are bots that are involved in mining or like farming this stuff, collecting them. As long as they have a non-zero value, and it doesn't matter how you denominate non-zero, it's non-zero, it's certainly not negative. Like there you go. What are people going to do? Now, at this point, I have to put the 80 sunglasses on because this is getting so cyberpunk. Like, seriously,
I love those.
ser- seriously, like, we're
Yeah.
doing incentive mechanisms on the internet and it's experimentation, and we find out what happens and what doesn't, what works, what doesn't, and then things live and die based on their utility. I like a point you made, though, which is, you're essentially bootstrapping a network, and things that have some, I hope, social utility, though that's not guaranteed, they will be the things that have a non-zero value going forward. And here's a way to get the engine going. So it's hey, look, a lot of it's not going to work, and that's fine. It's fascinating to watch how people act under incentives, but we see this in all kinds of facets of life. Um, and yeah, the airdrop phenomenon. I mean, we almost, to get a little bit meta here, we almost end up back in the fiat system, though, right? Like, we're just creating things out of thin air, and we're incentivizing people to do things. And if they do things, it has non-zero value. Do you have any thoughts of that meta layer there, where, like, of course, you know me and Bitcoin, like, I love it. It's scarce. You can't make more of it. It's fixed. But do we end up just in like a new fiat system? It's just the governments don't get to call the shots anymore.
Um, it is similar to fiat in that there's nothing backing it, and it's money literally being minted out of thin air. But in the end, it's a market. It's like people will give it the
Yes,
value that they think it
correct,
has.
correct.
Um, and so that's what's being played out. It's it's a really fascinating question. You know how much these dApps are actually spending in this customer acquisition, because in the end, you really have to look at it as a marketing campaign. Um,
Okay,
and usually, airdrops will be between 10 to 20% of total token supply.
okay.
Um, so, depending on the market cap of these tokens, it can be like a real, you know, a big amount of money that these protocols end up spending in in acquiring these users. But in the end, it was also just money made out of thin air. So is it really a lot to spend or not, right? Um,
Yeah. I mean, there's plenty of money made out of thin air. Apparently, the Federal Reserve has unlimited money. So it's not kind of a new idea, right? But it is a different manifestation of it. Uh, hey, look, if people find it useful and valuable and they want to take assign a value to it, then so be it. Like, there you go. That's the market, as you say. Let's turn it then to um, Solana and a separate topic, but they're somewhat linked. Um, layer twos for Ethereum. So Solana, as you say, rightfully so. We had Lily Lu on a couple of months ago from the Solana Foundation, and they've made changes to the network, upgrades to the software. They don't have the downtime problems that were occurring, let's say, 12 to 18 months ago. Solana has survived the Solana price. I mean, like last year, like, come on, it was up like 1,000% or something over the year. So start of the year to the end of the year. So it went bananas. What is going on around Solana, in your opinion? I've given some color there. How does it also relate to the layer twos for Ethereum? Because I think, and you can correct me if I'm wrong, it has to do around transaction cost, throughput, and ultimately utility of the different networks.
yeah, absolutely. So yeah, I think Solana is just a fascinating story. Again, like this huge comeback from almost dead to becoming the third largest chain. It's just been crazy to see. And I'm not sure what exactly drove it, because like their claim to fame is, like you said, cheap transaction costs, fast transactions. But so many other layer ones can, you know, have the same qualities, and also have, like Solana, there are smart contract exchange with uh, fast and cheap transactions, like Avalanche is one, like the Cosmos
Yeah.
ecosystem. I don't know, there's
Mhm.
so many layer ones who say the same thing. But Solana, for some reason, was able to break through that. Maybe it's their community, maybe just like the amount um, of capital that was invested in Solana projects just kind of made it have some sort of network effect, that just drove people and liquidity to the chain. I'm not
To
sure what it
interject,
was.
I think my opinion, and I could be
Hmm.
wrong, is USDC Circle when they integrated Solana, so you can transact with US dollar tokens on Solana in USDC. Like we know from the Tron network USDT, it's like the largest traded thing in terms of US dollar token stablecoins. That's maybe it. It's like it's got utility. It's cheap. It's fast. It works. It doesn't go down anymore, and you've got a regulated entity that issues US dollar tokens, USDC, and it runs on that chain. That's like I'm throwing it
Mm,
out there. There could be other reasons that the activity on the chain has picked up, but it's happening, huh? It's surprising.
yeah, I mean, yeah, I think we can speculate because I'm not sure if USDC is also on Avalanche. Like, I doubt that it's the only non-ETH and you know ETH chain that
Yeah,
USDC is on.
if it's EVM
So
compatible, right? Like
yeah,
you just redeploy it on a different network. So
yeah. Yeah, so that's what I mean. It's like I'm not sure what was the reason that made Solana grow the way that it did. That really kind of set it apart from other layer ones. But the fact is that it did, and uh, yeah, the way that it's being used right now, um, I think people can kind of. mm what's the word I'm looking for? They can look down on how people are using Solana now, because it's mostly meme coin trading. And so that's the other kind of related trend that's definitely been big this year. That's how people are using Solana now. But I don't think it's right to totally dismiss Solana as a meme coin chain, because right now it's meme coins, but tomorrow it's payments. In the end, people are trading meme coins in Solana because of the utility that we were talking about before, because it's cheap and fast. And so right now meme coins are kind of what's fun and just like trending in crypto. But the same reasons why people are trading meme coins, they'll be using Solana for many other like use cases on crypto. So
yeah,
I wouldn't like totally dismiss it.
yeah. They're paying fees. The network runs. It continues. It perpetuates. It evolves. Becomes more useful. Remember when people used to say like, "Oh, the internet, it's just for cat photos." It's just for sharing pictures of cats and dogs. But like, oh, what a silly thing. Like people are just sharing pictures of cats and saying GM to one another. Like really? But but it's that use. So how do you like send cats on pictures on the internet? Well, you have to get a broadband subscription and you have to pay to have the infrastructure actually put in. And sure, that's the first trivial use or one of the first trivial uses. But then also you can run high frequency trading. But as long as someone's paying for the infrastructure, then the infrastructure's there, then it can be used for all kinds of purposes. The point is the thing is built, it's been paid for, even if it is sharing cat pictures on the internet or in this case, meme coins on Solana. Like, so what?
Yeah,
It's done.
yeah. It's definitely a chain to watch. The other piece to it is that Recently, an ETF issuer filed to list a Solana ETF. So I don't know. I don't think that was pretty unexpected. Expected. I think people are still just like waiting for the Ethereum ETF. Um, and suddenly we have Solana ETF on the horizon. So like I said, it's just like firmly consolidated itself as kind of the one of the main chains.
Yeah, absolutely. So we've also got like another piece, and I know we're coming up on time, so let's kind of keep this one succinct. It's around the layer twos. For listeners, you should remember we had the folks from Coinbase on. They have their layer two base, which is a fork of Optimism, I should say. So you should already know this. If not, go back to the episode Coinbase talking about base. The point is that it increases throughput. It leverages the Ethereum base layer, but is separate from it. You pay fees into layer two, and there are multiple competing networks. That's a short story. Cami, I have noted, well, you and I know Arbitrum, big deal. Optimism, optimistic rollups, fork of Optimism, base
Mm-hmm.
gaining traction. What's your kind of snapshot on like that space? Because I see the fees, and you pointed this out in the prelude, like the fees that are meant to be paid to the Ethereum based layer are migrating into the layer two thing, and then they're not flowing through the base layer.
Mm-hmm.
What do you see is happening there, and does that kind of undermine the economic incentives to maintain the security of the base layer Ethereum?
Yeah, I think this was. Um, I don't think uh, most people predicted that the success of layer twos on Ethereum would play out this way because
Mm-hmm.
um, like the consensus before all this kind of layer two um, uh, growth was that to transact on layer two still have to um, post their data and transactions back to Ethereum layer one. So more activity on layer two should translate into more activity on Ethereum layer one as well. Like it, yeah, layer twos work in this way where there's a lot of transactions happening in cheaper and faster on these networks, but in the end, they're called roll-ups because they roll up like all these transactions and post them back to the Ethereum chain. But I think kind of the frequency that that's being done is not enough to to impact Ethereum. Like the activity that's happening on layer twos far outweighs and outgrows the activity that's happening on Ethereum because of layer twos. So what you see now is that you have just like record amount of activity happening on these Ethereum based networks, like yeah, Arbitrum base, Linea, like all these Optimism based and Arbitrum based layer twos. There's record TVL, record transactions per second, but Ethereum fees are at the cheapest in, I don't know, many months.
Yep.
And Ethereum is now inflationary. So,
Yes.
a big thing about this recent upgrade to Ethereum, where Ethereum was burning ETH that was being uh, emitted, like part of Ethereum uh, part of ETH that was being paid back to miners was burned. And so if there was a lot of ETH being spent in transactions, that
Yep.
that means more ETH was being burned, and that means Ethereum would turn deflationary. So that was this whole narrative, ultrasound money, this whole thing
Yeah.
that was big in the past couple of years. Well, now because of layer twos, all the activities going to layer twos, there's no ETH being burned, or very little ETH is being burned, and ETH is now inflationary again. So I don't think anyone was expected that layer twos would be so successful that they would end up taking away all of the activity away from Ethereum main chain.
It's like it's almost like they cannibalize the network. It's like,
Yeah.
if you like biology, like it's kind of like a parasite thing. But yes, so you said so the Ethereum network upgrades haven't happened fast enough to increase scalability, sharding. You and I know about that. The point is, like, that hasn't happened at the base layer. So in the meantime, these layer two things have turned up to meet the demand, and they're diverting fees from the base layer. And as they divert the fees in the base layer, they essentially cannibalize the base layer that they rely upon because people aren't spending money on the base layer, which results in the burning of ether based on the transaction fees that people pay. So that's what you get from a complex system where, like, there's no central governing body and it's a bunch of developers who are all doing different things and so on and so forth. Uh, but as you say, like, wow, it's gotten to the point where ether is now inflationary again, and that in of itself isn't a huge problem, but it does change kind of the economic underpinning for the network and the security over the medium to long term. So it's
Yeah,
that's a
absolutely.
big change, huh?
Hmm.
Uh,
Yeah, I'm sure like they'll figure it out. Like there's so many smart people working on Ethereum. They'll figure it out a way to make it work, and it's in everyone's interest to work, right? Like these layer twos exist because of Ethereum, so obviously they want Ethereum to succeed. Um, but yeah, I don't think people expected things to play out the way they have. So
yeah.
we'll see.
Yeah. Also, the radical transparency is good, right? So, like, there's plenty of things out there in the world where people are working on stuff. And you might say it's like I don't know, let's say a 5-year project. And after year one, it's going horribly. We hide it,
Mm.
we paper over it, and like no one knows it's going horribly. And then by year three, actually, we solved it and it's fine. And then by year five, like, you got this amazing thing. Oh, how did they get people to the moon? Do you really? Really, like, if anybody thinks getting people to the moon was a linear process at NASA, like, come on, really. That's not how change works, and that's not how evolutionary processes work, and that's certainly not how decentralized community who builds things and has to be incentivized to build correct things works. So, like,
Yep.
it's just, I love that it's so transparent, though. Like, anyone can go and look,
Hmm.
like you and I do, and go, that doesn't look great. And as you say, someone will
Yeah.
turn up and say, maybe we should not do that, and then you get
Hmm.
better outcome over time, right?
Yeah. Yeah, and you just get more brain power dedicated to it. There's just like
Yeah.
more eyes on it.
Yes.
But it's just messy, right? There's, like you said, there's like no central body controlling things. So, you get like some group of researchers thinking about things in Berlin, and maybe another group is like doing the same in Taiwan, and somehow they like some one day converge and and fix things, or I don't know. Like
Yeah.
it's just
It's
it,
messy,
it
but it
ends
works.
up working out, but it's maybe it takes a bit longer, uh, and it's messier.
It reminds me a little bit, as you know, I worked in cybersecurity forever, and you've got closed source software where it's riddled with bugs, and then you find out one day, like, the North Koreans have found a 0-day exploit and
Mm.
everyone's wrecked, right? The other way to do is open source software where everyone can see it, and then lots of eyes having a look, and they go, oh, there's a problem. Like, let's fix that. So again, that radical transparency is goes both ways, but, like, at least those folks can admit, like, it's not perfect, but we're doing something and we're trying to go in a certain direction. That's better than hiding it all up, like a certain large software company did for decades. And then everyone's owned by the Iranian Revolutionary Forces.
Oh
Anyway,
God, no.
I'm going down the
Yeah,
rabbit
so
hole.
this is all like experimenting out in the open. Same with points and airdrops. It's
Yeah.
all a big incentives experiment, and right now we're finding out how wrong it can go.
Yeah.
Um,
And there's lots of
so
failures along the way, but that's the same with
yeah,
companies. Like
yeah.
that's why they say 9 out of 10 companies go bust within the first 5 years or something like that. Like, yeah, of course, that's the entrepreneurial engine. That's what propels us forward as civilization and
Mhm.
lets us have nice things. Look, we're at time, Cami, but I'm sure the listeners would love to know what's top of your mind, what you've got your eye on for the next 6 to 12 months, because it's a fast-moving space. There's tons of information, but you're really well placed to pinpoint like one or two things that have got your curiosity.
Um, yeah. So besides what we've already talked about, I mean, those are
Mhm.
all ongoing trends. Um, I'd love to see how meme coins evolve. Like some people have been experimenting with um, turning them into like a bootstrapping mechanism for like something real, or creating social networks around them. So
Mhm.
I think there may be more to meme coins than just like
A
these
dog,
lottery ticket things.
a Shiba Inu.
Um, yeah. So that's one, and um, real world assets is another one. I we've just starting to see this sector kind of like really pick up and become something. Like it was always like an idea, but now it's like actually working um,
Yes.
for the first time. So
I wouldn't know anything about who's doing that, Cami. I wouldn't know like who's bringing that vision to reality. I wouldn't know, but like
oh,
you
okay. Well,
no
yeah,
product compliance, no
you guys are
product.
definitely at the front of that. Yeah. So yeah, that's obviously another big one.
Yeah,
RWAs that I'll be looking at.
yeah, absolutely. Yeah, that last one there we could dwell on for ages, but we're at time. Cami, you've got to come back. Like
Yeah,
I love
definitely.
chatting with you, and
Let's plan it.
yeah, let's definitely do that because it's always informative chatting with you. And I would never have gone for like meme coins or something, but that's what's going on. Like that's reality. So look it straight in the face, and then you can kind of navigate things going forward, opportunities and risks. Look, it's been such a pleasure to have you back, Cami. So we're going to do this again real soon.
Okay, sounds great. And thanks for having me.
Always a pleasure. Well, there you go. Camila Russo, founder of The Defiant. Check them out. The Defiant. Great DeFi coverage and just the broader crypto space. Good news, Cami's coming back every few months, so you're going to get to hear much, much more from her very informed position. US listeners, US, wisdomtreeprime.com. Check it out. Apple, Android app stores. Find me, look for me. I'm on it. I'm on it too much. The Bird app. X at Benjamin Dean. Thank you for joining us. It's always nice to have you here. I'm looking forward to having you here again next time.